Yeah, so now I'm gonna just start to look for these setups on XAUUSD and USDJPY. I'm gonna see what fun we can have executing trade positions on those two currency pairs. We're up and live. Up and live. Yeah, sure. Perfect. So perfecto. All right, that's a YouTube live going. Yeah, and I like to start those YouTube lives around 5:30. It gives me, like I said, at about like 5:10. I wake up, I gotta dust these cobwebs off. Uh, so that first 30 minutes, we're really just sitting, getting our chair warm, getting those bugs out of our eyes. And, yeah, moving to the point where we're at now, where we're, gonna look for some setups, um, and figure out how we can involve ourselves in the market this morning. As our CEO hops on the live stream this morning.
What's going on?
It was good, man. It was good. It was good. Just had the ADP non-farm employment claims, not employment, employment change. Drop earlier this morning. Just had an unemployment claim 6 minutes ago. Uh, yeah, a little turbulence down at 645.7. Some final services PMI, ISM services PMI. Outside of that,
Looks like we got some more what Bears news.
yeah, unemployment claims was slightly good for currency. Forex Factory didn't give us a green reading on the actual number, but the number is less than forecast, meaning it's good for currency, just slightly, but I noted that.
Yeah, this ADP. There's this ADP employment change, which was significantly off of the consensus.
Yes, crazy. I know I was looking at that earlier.
Yeah,
Way off, way off. And then I looked at some of the ones in the past. Like there have been like it's happened like where they've just been completely off. I don't understand how it could be that significant. We're talking 45,000 units difference between that number or between those numbers. It's, it's a lot. Ugh. Yeah. Revised labor costs. Bad for currency bearish.
you got anywhere with your interactive brokers?
No, no, I'm gonna spend today doing that. Um, yeah, I'm gonna spend the day doing that.
Yeah, the only thing I can't figure out is just that DXY.
Um, yeah, it's yeah, I'm gonna get in there. It's like, Let's get this IB up. Mhm. Mm. Welcome to IBKR desktop. Have you looked into those? I think they're called OCO orders.
OCO, no.
It's one of like their advanced uh, one of their advanced tools. I might have brought it up actually, where you said you automatically sets your stop loss take profit, your stop
Oh
loss,
yeah,
and
yeah,
it's not a take profit, but once it like hits that take profit, it'll move your stop loss up and keep you in the trade, but you move your stop loss up to break even at some threshold. I'm not sure. I want to learn about that as well and just kind of figure out some of these
yeah. I
little
thought it.
nifty little tools available to us.
Yeah, I believe it's in the bracket order.
Yeah, there you go.
What I don't know yet is like when you click on it and you go to set like the take profit, it says
Mm,
percentage of spread. And so like you can put your take profit plus 4,000% of the spread. Like I don't know if that is like if it's saying the price that you get in at, are you looking to get, 10% from that price? Or I have no idea what that is yet.
mm,
Because you can actually switch it to where it reads it in pips or it says ticks, but uh you can switch it to where you're looking for 20 pips
mhm.
or 30 pips. But I don't know if that is accurate because it only goes to 300 and it stops there. So it's kind of weird. Do you have the and my music is so loud right now. Hold on. While we were trying to talk over this jazz, do you have the TYS or the desktop app?
I believe the desktop app. I do. I have the desktop app. What do
Let me
you
see your
have?
screen.
Yeah, hold on.
The TYS. You'd
I'll,
actually
I'll,
really like the TYS.
I'll switch it. Hold on. I'll pull this up. Just what the desktop looks like. Yeah, like about similar, different.
Yeah, so this looks like a lot like the like the website. I'll just show
Mhm.
you real quick and then I'll give it back. But this is how the TYS looks. Trader workstation. Can you see my screen?
Oh, yeah. Yeah.
And so it's like all this stuff that you can
Oh,
you can
okay, okay. I thought I was looking at your
it,
trade view. I was like, God damn,
yeah, no, this bro,
show
this
me?
is this is
That's dope.
crazy.
That's
Yeah.
dope. That's dope. That's
Yeah.
dope. That's dope. Hold on, let me get that.
You take it back. That's what I've been trying to figure out. And once there's a YouTube video I was watching, is he
Hmm.
walks you through, and then once you understand it, there's so many settings that we probably won't touch because
Right.
just cause. But once we get our setup right, it's smooth. I just wish I can get the DXY or something on here. I might just end up saying, oh well. I mean, it's not that big of a deal. It's interesting too about just when I think about the lack of transparency that was in the Forex space.
Mhm.
Um, it's interesting with the interactive brokers that they don't let you do the simulated, like they let you have a paper account, but like
Mhm.
I can enter a trade right now and it will automatically take me out of the trade in like 20 seconds. Like it won't sit there
Right.
and like put you into profit. So just thinking about that, like, damn, that's because there's probably people with like MetaTrader, right? Like
Mhm.
just, showing that they were making money when they really weren't. It was just demo. Like
Yeah.
it's actually crazy.
Yeah, that's a good thought. It's a really good thought.
I don't think you can back test on this though. Yeah, I don't think you can back test. All right, let's see what's going on.
I downloaded
Services PMI. You said what?
it's a downloading the TWS.
Nice.
Yeah, Max clean.
Yeah, no, I think they clean. Services PMI.
Is it storming outside? Yeah, I'm sure. I thought I heard some thunder. But probably this is
That'd be
some
nice.
what would be nice. Fuck, we're 112 today.
Almost to the back end.
Almost there, man. Almost there. Oh boy.
Getting the coffee early today. That adenosine is that I'm gonna have to fight that today.
Like the adenosine.
Fight the adenosine today.
Mhm.
I probably hit snooze 73 times this morning.
Yeah,
Oh,
bro. It's yeah, it'd be like that.
it's like it's one of those ones where you hit snooze so many times, you don't even think that like you just keep hearing it. Like, did you even turn it off ever? It just keeps
Yeah,
going off.
yeah. No,
Oh, man.
100%. 100%. That's hilarious.
No, it's weird too. It's not weird, but it's just crazy because I was sleeping. I was going to bed at like 9:30, 9:45 for a good like 5 nights in a row. And
Uh-huh.
there's one night I stayed up past like 12.
Hmm.
And that was the night I slept in. And like
Hmm.
I did it again. I stayed up late again last night.
Hmm.
And my
Yeah,
body just is like, hold on.
yeah,
Where's that 10 p.m. sleep at?
yeah, yeah. I feel you. I definitely feel it's obvious, but I feel much better when I go to sleep at 10 versus a little bit past 12.
Do you ever feel it in like your like processing thoughts? You just
Oh
feel
yeah.
better. Yeah.
Oh yeah, 100%. 100%. But yeah, that's just the beauty of sleep. How sleep, why sleep's so important. But hey, man, we're here making it happen.
We are making it happen. Man, one thing I've really been liking that I've been
Uh-huh.
utilizing actually is these bear and bull flags for
Uh-huh.
just like trends.
Uh-huh.
Um, Marked one yesterday for before we had got the Jolts job openings. Um, and I've marked it on our dollar, and it's just been so clean, just how it looks,
Uh-huh.
along with that fundamental aspect.
Uh-huh.
There's going through the stuff that we've been taking care of. There was like one tab that said combining the fundamental and the
Uh-huh.
technical analysis.
Uh-huh.
Dude, that is a home run. That is a
Yeah.
home run. Like the top down analysis on that end, like combining the fundamental and technical,
Uh-huh.
is so money, bro.
Uh-huh.
I
Yeah,
was I was thinking,
that's the most like that's the biggest thing to like really figure out. And once
so
you figure out how to just work that top-down analysis on the fundamental and technical side,
yeah, I was sitting
yeah,
there thinking yesterday,
good.
like, damn, bro, once we really get a hold of these concepts and like really, really understand it, like completely, not just, to where we're maybe like 60-40 about what we're saying or 70-30 and having to double check, but like really clear on everything.
Mhm.
We're gonna have so much freedom on the market.
Go to the side. Yeah, for sure. Yesterday, um, I just like the puzzle analogy. And, thinking of just all the information that we're trying to learn, that we have the desire to learn. I think of it like a puzzle. And I called it a 1,000 piece puzzle. I feel like I'm about 60 to 65%. This is as far as my understanding. So I got about you know s- 600 pieces, about 650 pieces of that puzzle, kind of fit together nicely. I think once I get to about that 80 range, then I'll be able to really start to talk about this stuff without having to reference and make sure it's accurate. Um, and then yeah, once we get to that 95 the 95 range, this is one of those statistics where you'll never get to 100, but you can get pretty damn
Yeah.
close. Just figuring out how things work. Obviously, we won't like be able to predict the market at that point, but yeah, about 600 pieces done, 400 pieces left to put together to see this picture that the economy and global economics is presenting to us.
And it's a beautiful puzzle.
Percent, percent. I want to see. I have my side by side up. I want to see how the dollar reacts as it pushes up against this decision making level. You get stopped, held up, something in between. Because if not, I don't mind looking to have some fun here on USDJPY.
Yeah, I want to see if the DXY can get down to that 100.6 level. It's like the deepest I want to see it. Let's see it sell off. I know this let's see, what is it? Tomorrow, the non-farm and that unemployment rate is going to have a heavy impact on the market as well. So I'm curious to see how the services PMI will affect, if it will even give us any volume or volatility.
Mm,
I want to see something real quick. Because I know there was some data that came out on Tuesday that involved a version of the PMI. It was the manufacturing PMI.
mm,
Um, so I just want to see exactly so we basically like already got manufacturing data. So is that really important right now? Um, Ahead of this labor market news tomorrow. From the number of articles I've been reading, it's just everybody's kind of waiting on Friday's folder, Friday's news. That's why I say that. There was this one article. U.S. Treasury yields could continue to fall. This is important because this affects the dollar. If the U.S. Treasury yields continue to fall, so will the dollar. Um, as expectations for rate cuts by the Federal Reserve increase, reflecting a shift to safer assets amid concerns about slowing growth, says George Curry, global head of education at research at CFI. No idea where that is. Lower yields could contribute to the dollar's weakness as the narrowing yield gap between the US and other countries reduces the dollar's attractiveness. Non-farm payrolls data on Friday are expected to be slightly higher. However, weaker than expected figures could strengthen expectations for deeper rate cuts going forward, further pushing US yields and the dollar down. So maybe some speculation there that we actually get even further than that 100.6 range on our dollar. Shift into some of those safer assets. One of them that I'm thinking of when I hear that is gold. Uh, so could leave me with the observation that gold is going to start climbing for some more all-time highs. I know we were talking about that. When was that, last week? We were like, dang, bro, what could gold get to? 3,000?
mm.
4,000? Do I hear five?
-5.
Dude, I can't wait to go to an auction. Like I gotta go to an auction. That's like I always want to do that. Just give me one of
Yeah.
those paddles. Oh, it's me.
Mm-hmm.
Of
Yeah,
course, having
same.
the and I just love old school cars too. That's kind of what I think about when I think of an auction, like old school.
Yeah, anytime we have a family reunion, we usually
Nice. That's dope.
have a little auction. It's nice. It's kind of a smart idea because they use the auction to pay for the next family reunion.
Yeah.
Like everybody, like all the money, like all the money that's spent at the auction, all the money that's spent like on the gifts and everything is all funded back into the next family reunion.
That is called forward planning.
I'm over here on IB on Trader Workstation. I'm just getting this stuff figured out. I'm not. I actually won't just share my. Let me just share my entire screen. It should be okay to do that.
Something really weird about the IB, the trader workstation that I noticed is it doesn't let you put it over any other screen. So like once it's open, you have to have that as the window.
Um,
You know what I'm saying? Like you can't like have the trader workstation open and then put Google Chrome over it and then like you have to put it on its own window or it just won't come up. So annoying.
really interesting.
Uh, amounts of payments plays a crucial role in international trade, contributing significantly to exports and effect okay, increasingly important international trade, especially with the rise of digital services. However, many services are non-tradable and primarily affect economy, increasingly innovative, especially in areas like IT and finance. Service innovations can lead to new business models. What do they have this consumer services or uh, global services consensus point two? So they project a potential very, very slight increase. Very, very slight increase. I would like to see these numbers not come too far off from each other.
Mhm.
Um, to where it's like I don't think kind of same position we were in yesterday. I know yesterday there was the Joe's job openings, but prior to that there was the trade balance. Um, to where the consensus wasn't like super far off from the trade balance. So we didn't see that immediate volatility, but we ended up seeing it show itself along with another news floater that ended up coming along. And so, like I said, talk about tomorrow. I just want to see if this news folder is going to get us going today, or is it going to kind of maybe find itself at this level on the dollar before it decides to continue pushing downwards. I got the dollar sitting right on a decision making level between 101.1 and 100.9. Right in between there, I have a decision making level.
This Trader's Workstation almost feels vintage in a way.
Yeah, man, I told you it's like a Game Boy. That's what it remind me of.
So,
Like an arcade game.
mhm.
I really enjoy it though, honestly. Just everything you need on one screen.
My head, I've been thinking.
Oh, interesting. That's the famous jingle.
I get a spicy. I'm glad I'm off the desktop version. I'm not gonna get rid of it. I still have it. I think it's different utility, but this trader workstation, yeah, this is the hub to execute the trades for sure. The desktop version is nice because actually I don't know because it's really the same as a website. I feel like when you're logged in on a website.
Yeah, I didn't mess around with that one too much yet. It still felt like the kind of hit new window real quick in the corner, and then go to chart and hit advanced chart.
Mm,
Yeah, that's like the trading view. This feature
oh,
cannot be accessed.
damn, this month is not.
Well,
Let's,
wait, what?
uh,
Oh, you didn't? Did you not sign
did I
in?
log in? No, I didn't. I didn't.
The,
Does that
the
have?
advanced, the advanced chart is that trading view. It's the trading view chart.
But I gotta change my share.
Yeah,
Gee.
you good. Can't wait to buy my first government security on Interactive Broker one day. One day.
Yeah, hold
I
on.
was
I'm gonna stop my share for a second just as I get logged into this.
good. Take it real quick. Let's see what this. Looking at this article, this dude trading is actually fire for these articles. I'm not gonna lie. I actually spend a decent amount of time just when I'm sitting there bored for a second at work, or and if I
Mm,
have some time and just want to see what's going on in the market, I'll go to this news article and just see what people are talking about. Well, not
mhm,
people, but these companies.
mhm.
Reuters is I don't know where they get their information from, but they're very a highly used source from TradingView. I'm gonna actually see who Reuters is. Let's see. Sheesh. Reuters has a long-standing reputation for reliable and accurate reporting dating back to its founding in 1851.
Jesus Christ.
Over its 170-year history, Reuters has established itself as one of the largest and most trusted news agencies globally. That's all I need to know.
Interesting.
So now let me go back to this article that I actually wanted to read. Oh my goodness.
Hmm.
It says Bank of Japan policymaker Hajime Takata said on Thursday that central bankers must continue with their monetary policy shift and keep moving interest rates higher. Interesting. So the US is going to decrease their interest rates. Japan is telling their policymakers to increase interest rates. Yes. So for money supply, that's going to increase our money supply and devalue our dollar. For Japan, that's going to decrease their money supply, bring value to their dollar. That's fire. Mm, let's see. Oh, no. Oh, if I can see Japan.
Yeah. What's in there?
How they're looking.
Getting there. Yeah. Here we are. Looking fresh. Looking fresh.
There's no way I can see interest rate, potential interest rate. Yeah, that's super interesting thinking about that. I wonder if everybody has the same interest rate date. Does everybody pick their interest rate on the same date? Can't be. Interest rates. Oh, here we go. I love this. My FX book. Shout out my FX book.
Mhm.
Literally tells me I'm right now I'm trying to find basically when the Bank of excuse my voice crack when the Bank of Japan has their next meeting to adjust their interest rates. Um, because per that article I just read, it is they're being influenced by um I think that was a member of the central government of Japan, if I'm not mistaken, which is a little different than something that would happen in the United States. Bank of Japan policymakers. So just somebody within the essentially the central bank of the Bank of Japan, but um, they are encouraging more rate hikes from the Bank of Japan, which will decrease their money supply, increase on paper, and anyways, increase the value of their currency. At the same time, the United States is about to decrease their rate. So I want to see exactly when Japan plans to do that and how those stars align. So, Bank of Japan's next meeting's in 14 days about the interest rates. The United States' meeting is in, what's today? The 5th. So it's in 13 days, if I'm not mistaken. Yeah, it's in 13 days. Interesting. Where is it? Yeah, that is actually really interesting. So if the rates get cut, money goes up, value goes down. Rates get hiked, money goes down, value goes up.
Yeah, these Reuters articles are so good. Like they're super clean on TradingView too. It's easy for us to
Yeah.
read. And then I'm going through dollar sags as traders up their bets on jumbo US rate cuts. I don't know if you looked at that one already.
Which one was that? Which one was that under USDJPY or DXY?
DXY. The yen touched a 1 month high earlier in the day, in part due to safe haven demand, but also on the view that imminent rate hikes from the Bank of Japan, while other central banks cut rates, could lift the Japanese currency due to narrowing interest rate differentials. Interesting.
Yeah, so I actually had a light bulb moment the other day
Hmm.
because this entire time I always thought, okay, just because it's USDJPY and like we're technically like buying the US dollar and selling the yen. Like
Uh-huh.
that is actually I from my understanding now that's not true. It's the USD JPY that we look at is the yen valued in the dollar.
Yes.
And so that exactly what you just said is so money, exactly what's supposed to happen. The yen is supposed to we should see USD JPY find some bullish movement especially after the US cuts their rates, because the US's value of the dollar is going to go down. At that same time, JPY is increasing their rates, trying to bring value to their dollar. So then that's when we should technically see that USD JPY increase in
Mm-hmm.
in value.
Mm-hmm.
So that um which
Yeah.
article was that?
The one I was just reading.
Yeah.
It's it's called Dollar Sags as traders up their bets on jumbo US rate cuts.
I don't know what's playing in my headphones right now, but this is not what I want. Come on. There. Yeah, no, there. I'm gonna get to that article real quick. There's this article I was reading, the same one. It says at the same time, this is the one about Hajime just saying that the central bank must continue with their monetary policy shift and keep interest rates higher. It also says they should be monitoring the current space, the currency space
Mhm.
for any outsized speculation, especially after the recent carry trade in the yen, whose
Mhm.
painful unwinding this summer shook the fabric of the financial global markets. So I just want to see. This is about the 15th time I've heard carry trade. I want to figure out what the significance of that is. A carry trade involves borrowing in a low interest currency
Mhm.
to invest in higher yielding assets. It aims to profit from the interest rate differential between two currencies, which is what you
Interesting.
just mentioned.
Interesting. 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 Yeah, I
Okay,
want to
so
put my mind around that real quick.
okay, so the current Bank of Japan interest rate is, let me get it. Let me get it. Well, I just saw it. Where'd it go? It's 0.25. The current United States interest rate is 5.0, if I'm not mistaken. 5.5. So there's currently a 4 point, what is that? 4.1, 5.25. Actually, a 5.25 difference in interest rates between the Bank of Japan and the United States. Interesting. So, okay. So US equals 5.5, BOJ is 0.25. So that's a 5.25 differential in favor. Okay, so that would be in favor of the US. And so if you're the Bank of Japan and let's say you have business with the United States and you're
Mhm.
holding a United States contract or government security as the Bank of Japan,
Mhm.
your government security is about to lose value because the interest rates are about to go down in the United States.
Yeah.
However, using this carry trade, the Bank of Japan recently hiked their interest rates or let's see, on July 30th. So that's when, okay. And so if their interest rates go up again, That's interesting. Let me see. Investors often borrow yen at low rates,
Hmm.
which is when the carry trade started.
Hmm.
They borrowed at low rates. Now it's expected to move higher. Okay. This strategy can lead to significant yen selling pressure when carry trades are popular.
Hmm.
Okay.
So
Interesting.
I did explain to me what a carry trade is and explain it to me as if I was a high schooler. Uh, this is, yeah, a carry trade is a type of investment strategy when someone borrows money from a country with low interest rates, then invests it in a country with higher interest rates to make a profit. Here's a simple example to help us understand it. Imagine you have two banks. Bank A gives you a loan with only 1% interest. You borrow cheaply. Bank B pays you 5% interest if you deposit money. You earn
Mm.
more. You could borrow more money from Bank A at 1%, then put that money in Bank B, earning 5%. After paying back Bank A, you keep the difference, which in this case is 4%. That's the basic idea of a carry trade, using low interest money to make higher interest profits. In the real world, people often borrow money in a country like Japan, which has very low interest rates, and invest it in another country like the United States, which has higher interest rates.
Wow.
So
That's
a carry trade,
genius.
people might, it's like somebody really put some thought to this.
Yo.
In a carry trade,
Wow.
people might borrow Japanese yen because it's cheap and invest in US dollar because interest rates are higher, profiting from the difference in rates between the two countries.
Understood.
Muy interesante.
Yeah.
This is it's just this world just keeps expanding and keeps expanding. Knowledge keeps growing. It's very interesting. Very interesting.
That is very interesting.
'Cause it's almost like instead of trading like the difference in like currency price, you're just instead of the price, you're trading the interest. It's crazy. The interest differential.
My mind is it's blown right now. Like trying to continuously think about like how that's gonna keep. It's never like where does it doesn't end. It never ends.
Right.
It never ends.
Right.
And I think the other day I looked up and I saw that the Japan is in like a I think like at least $100 billion trade deficit to the
Mm.
US. So it's like they just continuously just fund each other and pay each other back and wanna that's so crazy actually thinking
For
about
real.
that.
In like this is so many creative ways too.
So many ways. Oh man.
That's a very interesting.
Man, I'm seeing Bank of Canada cuts policy rates. Bank of Spain, new governor prepares to cut rates.
I'm actually curious when Canada's having another election. I saw some people online going after their prime minister, Justin Trudeau,
What was that about?
just about
Economy.
their
Oh,
taxes for the most part. Like 44% in taxes.
just normal income tax?
Oh yeah, buddy.
Good grief.
Yeah.
Almost taking 50% of people's income is in that's insane.
Yeah. But then, and they do like they're structured differently just as far as like their education, their healthcare.
Okay.
It's yeah, they're definitely not structured the way we're structured in terms of that stuff. Um, but much more I need to learn about it.
Yeah, even like as we get more, in tune and at least for me, as I get more understanding of mainly those taxes and um how the fiscal policy of the central government fluctuates those taxes and um, you know this kind of helps us get into those concepts and understanding that because I know I've seen stuff from Skamala about the freaking corporate tax. Stuff like that. You see that?
It's,
You see that
uh,
freaking TikTok?
it's hilarious. No, it
Bruh.
was it's, it's,
Nah, shit.
it's hilarious.
Nah, but those freaking, from what I understand, that she's raising the corporate tax, um, but that is actually gonna hurt more people that do not make as much and who are not at the corporate tax level, from what I understand. Yeah, I actually want to spend some time, spend a few days as we get closer to the election and just kind of understand both sides, both policies, or all three sides, I guess. I think there's three people running. Isn't there only ever two? There's only two
Yeah,
main
there's
that can
only two.
mainly run, right? And then
Yeah,
there's always like that like black sheep party or what is it called? The when they're not part of any side. Isn't that one person that runs as well?
like an independent.
Yeah. Isn't that what?
Yeah, yeah, so it always boils down to two. It's like we've seen Robert Kennedy Jr., who was like
Yeah.
one of the bigger players, but he just didn't have enough support to carry on his own campaign.
Okay.
So he just
So it's
joins.
just Trump and Kamala right now.
Well, and so what happens is all these people kind of just end up backing one side or the other.
I see.
And so we've seen like the first thing that comes to my head is Vivek, like the Indian American guy who now backs Trump. He was running. He did a debate against Trump, not against Trump, but he was in the Republican debate way back a couple months ago. But he since backed Trump. Robert Kennedy Jr. backed Trump. I believe that was last week or the week before. But Robert Kennedy, he was the independent, the main independent this year, I believe.
And now he's backing Trump or Kamala.
Yes, yes, he's backing Trump.
Let's take a look at my 6:45 news in 11 minutes. Yeah, no, I definitely want to actually be aware of these new policies coming and whatnot. When's the actual election? Like the November 7th?
November, yeah, 5th, 7th, somewhere there.
November 5th. Interesting.
In the US, the top federal tax rate is 37%, applying to individuals earning over $580,000 in 2023. In Canada, the top federal rate is 33% for incomes over $235,000 in CAD, which is about, I believe that that'd be about 200,000 USD.
Mm.
But in the US, many states have their own income tax rates, with some states like Florida or Texas having no state income tax, while others like California have high rates up to 13.3%. In Canada, all provinces have an additional provincial tax. For example, Ontario's top rate is 13.16, while Quebec's top rate is 25.75. So that's really where they get you. Okay, so that makes sense. Yeah, that's actually a really big difference. A really, really, really big difference. Really big
Say it
difference.
again.
That's a really big difference. Just in the taxes alone. It's like on for the lowest tax rate at the state level, I guess in the United States, the California is one of the highest at 13. This is called 13%. In Canada, instead of doing it state by state, they do it province by province. And so Ontario's tax rate high, is right at the lowest tax rate in Canada for any individual province is right at what's the highest state tax rate in the United States.
Wow.
In
What's the
Quebec,
highest tax rate in the United States?
California, 13.3.
Okay. So no matter what you make in Canada, you're getting taxed at least 13%.
Yeah. Yeah.
Mm.
When just thinking about like the top tax rate, so in the US, that again, the top federal tax rate is 37%. And that's for individuals making almost $600,000 a year. Or in Canada, the top federal tax rate is 33%, so 4% less, but it's for incomes that are around $200,000
Mm.
US. And
Mm.
so you kind of ratio that up in, so you say in Canada, let's bump that up to 600,000, which is kind of like that USA limit. That tax rate would be three times. So 33 times three. So we'd essentially be getting taxed almost 100% if you just rate it up. That's not how it is actually, but if you just kind of
Mm.
prorate the data
No, that's
upward.
actually crazy. I feel like that's why we do get a lot of people coming over from Canada. Now that I think about it,
Mhm.
whether they're
Yeah, it's a lot of your income. And 235,000, I think, those numbers for USA and Canada, I think it counts like for like joint um entities, I guess if I can say. It's like if you're married, like the husband and wife income would combine to help formulate that $600,000 number or $200,000 number. Yeah, but like nowadays, like $200,000 like in a household, like that's certainly middle class. Certainly middle class. Like you're not necessarily
yeah.
struggling. I mean, depending on your lifestyle and how many kids you have, like you're not doing exceedingly well. Like in Canada, you're getting your butt taxed off. That's not like that's a tough pill to swallow. But yeah, that's what this video. There was like these like construction workers, middle class construction workers that are getting after him, um, because of the taxes. Again, there's so much more knowledge that I've learned. Like my sentiment and my thoughts towards all this is still building and growing for sure.
Yeah.
This is interesting. Interesting. Healthcare in Canada is publicly funded uh, and funded through payroll deductions, similar to the U.S. Social Security program. Uh,
Mm.
The U.S. taxes its citizens based on citizenship, meaning U.S. citizens must file taxes no matter where they live, though they can use foreign income exclusions or tax credits. Canada taxes are based on residency, meaning only those living in Canada or having strong ties to the country need to file Canadian taxes.
Mm.
Interesting. Learning about taxes this morning.
We got news in 3 minutes, 3 minutes. Yeah, those taxes is definitely something I gotta wrap my brain around. In a minute. See what happens here on gold. USDJPY lining up nicely to keep moving bearish on USDJPY amid some some bearish news from this folder here, Global Services PMI. Like I said, I suspect it might not be as too far off from the consensus, but I think we'll still support bearish movement. Let's see if we can break this low here. I want to break this decision making zone there, right at 100.9. I want to see if we can break that level. Yeah, and then after it's all said and done, I want to see USDJPY get down to this weekly level,
Mhm.
especially ahead of Friday's heavy deal of news. Oh,
Hmm.
snap. Just got a notification in my ear. So services PMI kind of has um I'm not gonna say as expected. What I wanted to see, not far off from that consensus. Um, s- you know, they had it the forecast 55.2, it came out 55.7. So yes, it is better than expected. However, it's not supporting like growth. You know what I'm saying? So is this is something I actually had to start because I used to deflect the forecast. I used to be like, what are these people just forecasting and just they're just making up projections and numbers, but I started to realize how much that consensus actually does play a part in the actual result. I used to just focus on like the previous month's data or the previous week's data, um, but was actually missing out on a key part with not focusing on the forecast. So while we may get some bullish momentum come in for a second, I don't think it'll stay. Um, just because, like I said, not completely far off in terms of being a better result than expected. If this number was like 57,
Hmm.
like I don't know what they like how far off it needs to be significant. I'm kind of just giving my what I would consider significant.
Hmm.
Maybe even, 56, 50, 56.2 or whatever the case may be. But zero point 0.5 differential is not super significant. Unlike the ADP this morning, that was about 46,000 off, right? That's a little bit different. Yeah, not only was it 46,000 off, but it was what 11,000 lower than last month. So
Hmm.
they expected it to go up and it actually decreased a lot more than they expected and more than last month. So like we're writing that news right now, that news folder. Um, it kind of I was talking about this a little bit yesterday and developments I made and over the last like month in discerning these news folders. And with there
Hmm.
being so many news folders, it's like which one's important? Which one's gonna affect now? Which one is going to support our trend? Which one is going to, confirm the correction or the reversal potentially? Like, and understanding that stuff. And so there's three type of indicators that this concept is one that I'm going to continue driving home for me, and this is what's going to help the top down analysis. Um, there's the coincident indicators, economic indicator. These are all talking about the news folders. Um, so there's coincident, and that is what is going to tell us current market, the current state of the market, current market data, like what's going on now. So that's something that we should see affect price immediately in the moment. Um, there's the lagging indicators, which is going to it's going to validate previous price, which is what we actually saw yesterday happen on the dollar and in terms of the JOLTS job openings coming in and validating the previous bearish trend because anything labor market is having to do with previous data.
Hmm.
Um, and then there's the leading indicators, which tells us the looks into the future of the economy. Um, and then there's like they're categorized into either leading, lagging, or coincident these news folders are. And then that is kind of how we start to discern, okay, this folder is going to have more importance today because, we want to see it confirm the trend and whatnot. Or, this folder will have more importance because, you know, we can see this on the long-term scale happening, right? And just start to formulate, okay, which one has the most significance today? Which one should we be looking at in the future? Which is why I
Mm,
was so focused on NFP um, come Friday. So I want to see how this continues to affect price. Not seeing any, bullish volume come in, which is exactly what I want to see. I would like to take some sales here if I had an account as we gotten as we get some confirmations to potentially come in.
mm, mhm, mhm, mhm. Yeah, I'm continuing to just dive into just my tax understanding. Kind of gone down a rabbit hole. Just was curious about just the various different tax brackets in the United States.
Hmm.
Just kind of how that works. So there's seven different tax brackets.
Hmm.
Um, seven different tax brackets. And reading this, it makes it very apparent why one would want to avoid being in a higher tax bracket by avoiding their income on paper, putting them in a higher tax bracket, particularly when you go from the fourth tax bracket at 24% to the fifth tax bracket at 32%. And
And
then I
that's the
want go ahead.
that's the change in how much they're taxing your income, 24 to 32.
Yeah, yeah, between those
Sheesh.
two brackets. Between those two brackets. And that fourth bracket, that 24%, that's for income range of 95,000 to 182,000. And then I wanted to make a correction on myself because I talked about joint filing. So what I like to note here that the tax brackets for people who are married and file jointly or have other filing statuses are different. The income ranges
Mm,
for those brackets are wider, meaning couples can earn more before moving into a higher tax bracket.
mm.
I wanted to emphasize that. And then the last interesting point here is so like you won't like if you make so you let's just say for example you're in that fourth tax bracket at 24%, and let's say you make $100,000 a year. So you're not getting taxed at 24% on all 100K of your earnings. You move through the brackets. So that first tax bracket is 10%, 0 to 11,000. Even if you're in the fourth tax bracket, 11,000 of your income will remain in that first tax bracket.
Mm.
And then your income between 11,000 to 45,000 will be taxed at 12% in that second tax bracket. And then 22% of your income is taxed between 45,000 and 95,000, and then all your income between 95,000 and 182,000 is taxed at 24%. So not all of your income is taxed at that bracket's tax rate. You kind of move through like your income is moved through those tax brackets,
Yeah.
which is interesting. I didn't know that. That's interesting. Yeah, I'm gonna move off that rabbit hole.
Hey, that's a whole nother puzzle that we have to put together. Definitely a definitely a puzzle that I mean, even being Business owners, I'm sure there's a number of ways we can
Yeah.
utilize that.
Yeah, well, we see it. This is how they operate at the corporate level. Just not even the corporate level, just in professional sectors. It's the whole tax side of things.
Um,
Everyone's trying to figure out how to pay less taxes, optimize their tax bracket. We've seen the former president, Mr. Trump, get himself looked at for
yeah,
potentially. And again, I don't have enough information to really speculate, but we've seen him you know leverage the tax system for his benefit. But much like that's just what those guys do.
kind of like
Make
just like the interest rate stuff. Like
Mhm.
it's a great play. Like it's a
Yeah.
great play. Like you know,
Mhm. Yeah. But I'm gonna run to the restroom before this 7 o'clock news folder hits. Be right back.
so I've gone into it before. Oh, almost fell out my chair again. Missing a wheel on my desk chair. So, kind of how the world is trying to find balance in their trade deficit. I have to find balance as I'm sitting in my chair. I'm going to fall, um, which I do pretty well. I'm going to get a new chair soon. Don't worry. I need one of those ergonomic things so I don't have bad posture, um, which is also why I need a new mouse as well. But I wanted to pull up, ah, dang it. Oh, I know what I wanted to pull up. I wanted to pull up my notes on nope, we're not here. It's in this. I wanted to pull up my notes on ISM because there is S&P Global PMI and Services PMI. So I know I had some type of difference in here. Okay. So the ISM, okay, okay. So this ISM is specific to the US. And so when thinking about this one utilizes some aspects globally. This is specific to the US. So the reason that I'm going to put more importance on this today, this folder, um, so we may see some volatility come in for this folder if it ends up reporting it lower than the consensus. Even if it's slightly, I still want to see that volume now come in the market. Once we do get that folder to come out, because it is solely being based off of U.S. performance, new orders, production, employment, like that stuff, just directly contributing to the productivity growth. And is our economy improving? Is it showing any type of expansion at all? Um, and so that's what I wanted to see, the because we look at this and we're like, what is the difference between, PMI and PMI, right? We see two PMIs, but this one's global scale. This is a more personal scale to the United States. Um, we saw not much change in our consensus here. And so now, as we gauge the potential result here, we see that their consensus is zero point 0.3 off the previous month, right? So they project it to decrease. So if it decreases anything more significant than what they're seeing, that's when we start to see increased volatility within the market. Um, Let's watch it on our dollar. There, there it goes. Now it's moving bullish, but that doesn't mean that it's okay. And so, actual result comes out slightly better than the expected result, right? Just slightly, zero point 0.4, which is why, what are we getting? We're getting bullish volume to come in because it was slightly better than the expected result. Right now, in terms of significance, how we can start to deem, okay, is that a significant change or is it not? I think it would be valuable for us to go into the history, because then we can, start to look at the consensus over time, right? And then value that against how price moved at the time, right? And then start to gauge, okay, so it seems like anything over a one, maybe even a point 0.5. I want to see how it performed here on December 5th of 2023. Uh, let's see how it performed here on December 5th of 2023. And that folder came out at 7 right there. So got a nice strong bullish candle. Um, and what did we say happened on that day? December 5th of 2023. Okay, so on this day, it was zero point 0.7 better than the consensus. And I mean, it did move bullish that day. That's actually a good move. Let's look on like a USDJPY and um see how it moved then. USDJPY December 5th, 7, same type of candle. What about gold? December 5th, 7. Okay, so what we're seeing is just not, um why I'm looking at this is because now from what I'm basically understanding is zero point 0.7 is didn't give me significant movement. It being slightly off of the consensus, it didn't give me that um increased volatility. And so as we bring it into the current time, yes, we're getting this bullish momentum and this bullish move, but my speculation is on how tomorrow is going to perform. My speculation is on how tomorrow is going to react, how tomorrow is going to perform, um, with the NFP. And so this being not a significant change, this is old, but this is current data, you know, zero point 0.4 off. Yes, it's bullish on paper, but this is not something that I'm looking at like, okay, let's enter buys, let's enter buys, let's enter buys. That is an area that I've developed in because I'm starting to understand these economic indicators, right? Because before I'm just really looking at the result. Okay, are we getting bullish news? All right, let's enter buys. And it's not just always that cookie cutter, right? It's just not always same with like the freaking the interest rates in the US, right? And that's still a puzzle that bringing it back to the 1,000 piece puzzle, that's still a portion of the puzzle that I'm trying to put together. Um, I like to look at it, in if we take that 1,000 piece puzzle and we break it down by, 5 different puzzles, right? There's certain parts that I have completed already, and I'm still trying to just complete the rest of it and how it worked and then how it works together to make the whole. Um, and this is this is one of those ones when it comes to the interest rates that I'm still trying to put together because on paper it's supposed to be, when the US cuts interest rates, money supply increases, devalues the dollar and whatnot. But the same way that the news just came out, it's not always that cookie cutter. Um, so it does take some analysis on the fundamental side of things and then on the technical side of things to not be um, swayed by each and every folder, each and every movement of the market. Um, Start to really find balance, and it almost is like, and Q can attest to this. There's a certain time and when you're playing sports where the game starts slowing down and you just start seeing everything happen. And you're really able to pick and choose what you choose to engage in.
Mhm.
And that's kind of as we were talking about the puzzle, that's where like we're getting to. It's where I'm personally getting to as um watch these news folders happen along with price action. It's starting to really slow down.
Mhm. Mhm. Yeah, and what makes it slow down, right? That's the question. That's what everyone's trying to figure out. Um, and just comes down to our preparation. Comes down to our preparation, doing the due diligence. On the basketball side of things, watching film, getting up your shots, getting your reps in your specific areas, your spots. That's literally the exact same thing we're doing here. And I think I look at the developments we're making just in understanding the economy and the macro like that, like from a individual from an individual entry perspective, like what's going on in the economy. You could say it really doesn't mean that much because I could just trade price action. I could read the volume. Um, but when you think about just the long-term game here, and then the continuations of our top-down analysis, like I've expanded top-down analysis way past the daily time frame. I'm thinking of what's going to happen in a few months from now, a year from now. Is all that's going to do is allow us to make more and better informed decisions on our trade to trade basis, on a trade to trade basis. So Mark, as you talk about just how each individual folder, yeah, it has impact. And yeah, what am I trying to say here? Yeah, each individual folder has some sort of impact, but it behooves us to get wrapped up in each individual folder and what it does, and then how that individual folder is going to impact the market. I don't
Mm,
think that's really what we're doing here. We're not really just trying to figure out what each one of these means, but we're
yes.
thinking bigger than that. We're thinking about how is this going to impact the economy? How is
Uh,
one, where we at in the economy, and what information can we gain into understanding what's going to happen in the economy in the next 3 months, in the next year? Because understanding that stuff will allow you to do that. But it's starting with those each individual folders and understanding what those mean. Just kind of the topic, if you say that folder represents, whether it's employment, inflation, things like that. So we will begin to figure out, as we continue on, um, how each one of these folders truly will impact the market. And I was talking about this not yesterday, but on Tuesday. I've started to like sort all these folders that come through into just a couple different bins, right? Because we have a lot of repeating folders, but all these folders kind of can be categorized in one sort of category. Like I said, you have employment, um, you have trade balance, you have retail sales, you have inflation data. So you have all these different folders that in some way can be categorized in just a few different things. Uh, I think it's that just kind of helps me is as I'm reading all these folders and reading
Yes.
what they mean. If there's something that gives me a key into what kind of bin I can sort that folder in, I'm like, okay, I'm not going to take this folder as this one folder. I'm going to add the information that I gained from this folder into that respective bin. And then look at
Yes.
the bin, look at the total, what's going on in inflation, what's going on in the labor market. Not so much just, our PMI folder that releases at 6:45 on Thursday, September 5th. But how is that folder, that PMI folder that drops at 6:45 on September 5th, how would that impact the bin that it goes in?
Yes.
This is kind of how I'm kind of framing this just as we
Yeah.
continue on. We're probably 2.5, 3 months in. It's for like as far as like dedicating time and energy to understanding this stuff. It's still so early on, but man, making developments every day, light bulb moments every day.
No, that's literally it though. Like, I think you got 100% right. And that's how the people in the Fed are looking at it as well. They're putting those folders into bins.
Hmm. Hmm.
You know,
Hmm.
this is the folder that's going to tell us production,
Hmm.
and that's going to tell us productivity. This is
Hmm.
the folder that's going to tell us that we're, spending more than we're producing. So I love that. Like tomorrow NFP, that we could say that has to do with labor market, probably even I even put like consumer spending within the labor market. Um, Anything that has to do with consumers or just people, I just categorize in the labor market. Um, just thinking about one person's spend being another person's income, and then that just leading to productivity growth.
Hmm. One person's spending is another person's income.
Rent free.
Rent, rent, freaking free. Rent freaking free. I was while I was eating my dinner last night. I watched like the last 10 minutes of that video again. I just love the way he makes just understanding the economy and the cycles that we go on really simple.
Yeah. So what would you say? Because I feel like that last part of the video is what I'm trying to what I'm trying to correlate to current, uh, uh, like our current economy.
Mhm.
Would you say we're closer to the beautiful deleveraging,
Mhm.
or are we closer to when basically the Fed decreases the rates and then we see it increase our
Mhm.
on that long term, short term cycle, we start to see it move upwards.
Mhm.
Or is it to the point of where, even if they do decrease those rates, it's like darn, 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 like it's going down
Mhm.
anyways.
Mhm.
Like,
Mhm.
um,
Yeah, that's why I think where we're at right now is just so important for like our policymakers and the Fed and then the policymakers to get right.
yeah,
Um, because interest rates have yet to be cut. And so we haven't quite gotten to that point yet. But we know it's coming. We know that's in their plans. So it'll be interesting to see as they cut those rates, will that stimulate the economy.
Mm,
As they're trying to bring down inflation, as they're trying to deflate the economy, will bringing down the interest rates help stimulate the economy? Because
mm,
if not, then we will move into a deleveraging. And then at that point, depending on could be depending on who's in office. But again, there's what do you say, the four different factors that pertain to a deleveraging, get us out of a deleveraging. It'll be on kind of working those four things in order to stimulate the economy, um, and doing it in a way that keeps the balance, that keeps the balance in the economy. Because as long as the credit balance is stable,
yeah.
that's where the beautiful deleveraging comes. But when the balance gets too off kilter, when debt is just too high in respect to income, that's
Mm,
where the leveraging gets really, really hard because you can't decrease interest rates anymore. The Fed can only print so much money. Um, so it's on getting those four things right to keep the balance, even while we're going through a deleveraging. So I think understanding what if Trump gets in office, understanding his plans, in terms of that, Kamala as well, just the policy they want to implement. Of course, they can't influence, I guess, directly the amount of money in the economy because the Fed does that. Of course, the government can put money in the hands of people, which the Federal Reserve cannot do. Um, yeah, it'll just be interesting how they kind of collaborate. Um, I think as we get somebody new in office, we'll start to kind of get a better picture on their plans and moving through the next year.
yeah, I'm definitely interested to see how it transpires. I'm gonna just
I
play this
want
part
to
of the
find those
video
four
real quick.
things.
Yeah, I was trying to pull it up in this video real quick. Think I got it.
Growth is slow, but debt. However, printing money could easily be abused because it's so easy to do and people prefer it to the alternatives. The key is to avoid printing too much money and causing unacceptably high inflation the way Germany did during its deleveraging in the 1920s. If policymakers achieve the right balance, a deleveraging isn't so dramatic. Growth is slow, but debt burdens go down. That's a beautiful deleveraging. When incomes begin to rise, borrowers begin to appear more creditworthy. And when borrowers appear more creditworthy, lenders begin to lend money again. Debt burdens finally begin to fall. Able to borrow money, people can spend more. Eventually, the economy begins to grow again, leading to the reflation phase of the long-term debt cycle. Though the deleveraging process can be horrible if handled badly, if handled well, it will eventually.
This is where I feel like we are at right now.
Hmm.
We are on one of these guys, and we are either gonna keep eating or
Fix the problem.
find that
It takes roughly a decade
find this reflation period.
or more for debt burdens to fall and economic activity to get back to normal, hence the term lost decade. In closing, of course, the economy is a little bit more complicated than this template suggests. However, laying the short-term debt cycle on top of the long-term debt cycle, and then laying both of them on top of the productivity growth line, gives a reasonably good template for seeing where we've been, where we are now, and where we're probably headed. So, in summary, there are 3 rules of thumb that I'd like you to take away from this. First, don't have debt rise faster than income, because your debt burdens will eventually crush you. Second, don't have income rise faster than productivity, because you'll eventually become uncompetitive. And third, do all that you can to raise your productivity, because in the long run, that's what matters most. This
VXT volume times time. Mm,
business
gotcha.
is a
No,
government
that last one is I honestly put so much. Oh, here it goes. I put so much importance on
can happen.
any manufacturing, industrial production, productivity, any of those folders. I just automatically, I'm not gonna say automatically, but I'm really analyzing how that folder is going to impact the market and kind of what the market sentiment is around that because of that last thing that he just said. And um,
Hmm.
but this is, I think this is what you're talking about, right? The four
Yeah,
different
yeah. And
different
it's
levels.
interesting because as you watch the video, like you'll just think of like little things you've seen like in real life. Like, okay,
Mm,
Kamala's proposed, tax plan. Okay, that's redistributing wealth,
mm,
reducing debt. You see the rise in debt distribution companies like SoFi, etc. And then the cutting spending. So it's interesting. It'll be interesting to see how businesses, how government possibly cuts spending in order to stimulate the economy and keep the
mm.
balance. But yeah, it's interesting. I just wanted to point that out.
Yeah, it's very, very interesting. Still seeing some bullish movement here from USDJPY. I see this break in price here that I never like when I see that. Um, it's almost like a sign for me that we're gonna come fill that area, which would support my current outlook on USD JPY, which is bearish until we get to about 140. Until we get down to this weekly level, it could honestly not get there, but I want to see it take out this liquidity. Thinking about, let me see, when was this? August 5th. Something happened on August 5th. There was something that I was looking at for that.
And looking at USDJPY right now, and I just put on, I'm not executing a live position here, but putting on a short position tool here on the market. Um, playing the inverse VXT here, and come back and get back down to that area, that gap, and fill that area of imbalance on the 5 minute.
That would mean, right, so these there. It bought up from that level. It bought up from that level because increase. Interesting. Not mean to open that. Enough of the trade locker. Yeah, I wanted to see it come up here and see if we wanted to take out some of these points of liquidity potentially. That was the one area that
Mm.
I wanted to see just at that decision making level. Maybe even these levels wouldn't be a bad idea. Um, because if it comes in here, I can make the assumption that it's going to come up here and get those. But this is the first level I want to see take out and respect that 1 hour decision making level.
Mm-hmm.
Um, I too am not entering any trades, but just I marked this short position just to see how price respected that level. Would be where I put my stop loss, um, and then just taking this down to that weekly zone. So just wanted to see how this would play out. Um, but look at that volume. That's what you're talking about on the inverse VXD.
Yeah.
Sheesh.
Yeah, really end relativity on looking at our 5 minute.
Mm,
But again, only playing inverse VXT when it's aligned with my general sentiment, when the trade is aligned with my general sentiment
mm.
on the
No, I
overall.
like that. I see
Right.
that. So because we're bearish and I see. No, that's fire.
Minimizes the risk.
Yeah. Instead of just really playing every single area of inefficiency,
Exactly.
leaning on the side of it's gonna fill those inefficiencies because that is what the trend supports. I like that a lot.
Right. Right.
Because I mean, it's really easy to just be like, all right, inefficiency on the buyer side. Okay,
Mhm.
inefficiency on the side. Let's just keep buying and selling and buying and selling. Which could have some success that way, but actually like could be risky as well. Like you could run into, trades where you're maybe holding a lot longer than you wanted to do that because it didn't feel that inefficiency right away. But um, when you're in a trend already that supports that inefficiency, you're not
Mhm.
really hoping for momentum or volume to come in. You're just expecting it to continue with the current momentum and volume that it has.
Mhm.
Actually, really, I love that so
Mhm.
much.
Yeah. And of course, very, very, very soon here we'll have full breakdown and analysis of
Oh yeah.
exactly what we're talking about here.
Oh yeah. Let's see what this does here. I had Matif up earlier. I didn't really like the way it looked. It made me create an account. Kind of made me mad. Made me Matt. Maybe Matt AF.
Mhm. You know, would be nice. It never happened, but every website like that, like you just pay like a monthly fee for like just full internet usage. Like you don't need to like pay for every little
It's,
thing, create an
yeah.
account. Just you just have like an internet account and an internet ID, and you're verified through that ID. Yeah, it's probably a silly idea,
That is
but
actually soon to come. That's like part of like the Web3 stuff. When I was
mhm.
actually deep diving into that,
Mhm.
or like 2 years ago, that's kind of like with like the Google stuff that they have now, like the Google sign in.
Yeah.
That's like the first wave of it right there.
Yeah.
Did I hear my precious? I just heard my precious girl. Little baby girl. So this is interesting on Mativ. Um, Not interesting, but we're able to view, disregard this side of the screen, but able to view just the JPY, no dollar movement, just strictly JPY. So it's about $65, or is it 65? I'm not sure what the 65 is measured in dollars or cents. Um,
Mhm.
but we see that it's not the same as this is kind of what started that thought process, what I said earlier about understanding, oh, wait, this is not just JPY, but you see here it's USD to JPY is rated at 143 versus JPY just being this number here. But then we're just seeing the bearish movement as we are bringing it back to this imbalance, right? So we should see this area definitely get filled. I'm just gonna sign into my damn. Give it to me. Want to give it to me?
Mhm. Mhm. Yeah, and so as we put 7:30, today's Thursday, so not on tomorrow, obviously. Um, as we move into next week, anybody ever has anything you particularly want us to go over, talk about on our live calls? Anything you want us to do a little bit of research on, provide more insight on? Just let us know. Um, would would love to get some feedback, get some additional things to some specified things that that everybody needs, wants us to go over. Definitely wanted to make that clear.
Mm.
Uh, yeah, another good week here, and when we concluded last week, I concluded last week with saying that I wanted to um, fund my live over the weekend and get trading live this week. But late last week, Marcus and I made a decision to just go to Interactive Brokers. It's the regulated broker to go to in the States. Of course, this is not a recommendation or anything like that. I'm just telling you, I'm just giving everyone insight into my plans um, and just kind of our trajectory. So we made the decision last week to move over to Interactive Brokers. We spent the last couple of days just starting that relationship with that broker. There's still some things on my end that I have to figure out, which I would do over the weekend, over the next couple of days, and then in here I'll close this week the same way I closed last week. But making the decision, I think it's definitely in my best interest, our best interest in terms of what we want to do and our plans, my trading plans. Um, Y'all have everything figured out moving into next week. Fund that bad boy, and we're off and running from that point. So we're really excited to get back into it, moving into next week.
Yeah, no, I'm right there with you, especially with not being eager or anything, but with this end of the fiscal year is something that I'm understanding of why there's so much volume in the market. Like I've seen it in the stock market with the plummeting of that, just like why there's so much movement going on in these financial markets. It's just because we're coming into the end of the fiscal year for like the central government, so they're going to start sending out their spending packages, and we know we're getting a new president, all that stuff. So I'm gonna have I definitely want to have my interactive brokers ready to go next week. I would have liked to have it ready to go this week. Um, but even with the NFP on Friday, I don't trade on Friday, so that wouldn't have changed anything anyway. So uh, yeah, I look to have mine ready to go next week. My interactive brokers is pretty much already ready to go. Beside the fact that I don't have my DXY on here, which I don't even think we will be able to get it on here. Um, and then besides the fact that it's not funded. So um, there's a little aspect down here, this what we were talking about earlier that I'm still trying to figure out of
Mhm.
what, like this stuff means and versus, percentage of spread and this part of it. Um, But if I had to, I could actually like market execute and then close my own trade, which I don't want to have to. I want to just know that stuff, of course, but next week I should be ready to go with this. Start throwing at least $50 in there. Every check is my goal, $50 every check until I get to my $1,000 trading account. Um, but yeah, pretty much it. Pretty much all I got.
Yes, sir. Yes, sir. Another good week.
Um, to what you said too, real quick, Q, is you said freaking anybody want us to look up anything. It could be
Hmm.
stuff that we even talked about today too. Like maybe it was a concept that you're just like, oh, can you guys just go into that a little bit more detail or slow down with that, or anything at all? Because uh, this is it's not something that I know like the back of my hand to where I know I don't convey message the best way the first time. And I know it may take a few different times for us to, get those messages and build that bridge of understanding. So
Yeah.
do not hesitate. Do not
Right.
hesitate. That's what we're here for.
And we're on here learning
Literally,
and
literally.
really speaking about it. That's really where we're at. And hopes to get into a point where we can just speak highly
Yeah.
intelligently on all these topics. Uh, so again, yeah, let's learn together
VXT,
and
VXT.
let's make this happen. VXT. Time. Boom. All right, everybody. We'll see all you guys same time, same place on Tuesday.